Hi everyone! If you have fast food business idea, this video is for you. Today, we will be doing the overview of a financial model. Also, we will be covering the inputs that affect financial efficiency: revenues, costs, profit, payback period, financing needed, and many others.
The link to download this model will be placed in the description of this video. We can also automate your reporting environment using Excel and Power BI tools. You can also check out other financial models and Power BI tutorials for the business owner.
All links you will be able to find in the description of this video. If you find our content valuable, please hit the subscribe button and give us a like. Share this video with your friends who have their own businesses.
All inputs in our financial model are colored with blue. This will help us easily find and play with all inputs across the model. First of all, we need to set up the first year of financial projections. This will be the year when investment stage begins.
Next block of inputs will be covering when we get the first revenues, the start of operating activity, year and month. Then we have our menu. In the first column, we can specify all the items that our menu consists of. Then, we have a column that shows us total food cost for all the items in our menu.
Next column, food cost margin. Here we are adding our margin in percentage value to the food costs, and the result will be the selling price per item. Here, we can see the selling price in dollars per burger. For example, status column allows us to switch on and switch off each menu item from the project and see the cash flow statement with or without this or that burger. It helps us see the payback period, profit, and other financials in this or that scenario.
Then we start working on the food cost for all menu items. First column is the list of ingredients that participate in cooking our burgers. Then we specify the price per one item for each ingredient in metrics of each ingredient.
Next column. Here we can set up the frequency, how often we buy each ingredient. Once a month, once in 2 months, or once in 3 months, up to once a year.
Next column. We need to set up when we are going to buy each ingredient. In this month or 1 month beforehand, or 2nd or 3 or even up to 6 months before we need it.
The parameter affects operating losses that affect total amount of financing needed to start the business. We can go to the cash flow statement and see these losses here.
Next block of inputs, direct costs. From top to the bottom, we have a list of ingredients. From left to the right, we have our menu. In this area, we need to specify the consumption of ingredients in the metrics per one item of menu.
Moving to the sales plan. Here on the top, we have a typical week from Monday to Sunday. From top to the bottom, we have our menu. In this area, we can set up the amount of units sold for each item of menu for each day of the week. If we have any seasonality in sales plan inside the week, we can specify it here. Some spots have decrease or increase in sales during the weekend. Others, on the contrary, may sell more from Monday to Friday.
Next block of inputs. Here we can specify the amount of Mondays, Tuesdays, and so on for each month to get 365 days in totals. This will make our revenues look more accurate. We may also have some seasonality in sales inside the typical year. 100% is a maximum. Here we can decrease the amount of sales if we have some bad months inside the typical year.
When we start a new business, we won't be able to reach the target revenues right from the first month of operating activity. Here we can specify the percentage of target revenues. This parameter is very important and will affect the amount of operating losses inside the cash flow statement. Here it is, let's look at it. and the amount of operating losses will affect total amount of financing that we need to start the business. So this percentage value is sensitive to amount of financing which is needed to start this business idea.
Let's move to investment plan. Green column is the month when we start our operating activity and get the first revenues. Now we are moving backwards. Here we are specifying what we are investing in. There is a chronology on the top, so in this area we are specifying how much we are investing in and when.
Payroll. List of positions is here. Then we specify the salary per person per month on each position. Next column. We need to set up the amount of people on each position.
Moving to fixed costs. For fixed costs, we also have seasonality. From top to the bottom, we have a list of fixed cost items. From left to the right, we have a typical year chronology. Here, we can specify fixed cost seasonality if we have one, of course.
Then we need to specify the depreciation status and depreciation term in months for each investment plan item.
Moving to taxes, we may have 6 types of taxes. Value-added tax, the tax base is added value. Asset tax base is the asset's value at the end of the period. Salary tax base will be the salary. Net profit tax, the tax base will be the net profit from the P&L statement. Revenue tax, the tax base will be the revenues. Next possible tax, total revenues minus total costs including investment plan expenses. If you don't have this tax, simply put 0 here.
Here we can see the cash flow. We can press plus buttons to see all the details. For the revenues, direct costs, fixed costs, payroll and taxes, and investment plan. The result from operating activity will show us how much we earn without loan payment and investment plan expenses. The result from investment activity will show us what we need to invest in, how much and when. Then we have the result from financing activity. During first stage of the project, it shows us equity and loan inflow inside our business idea. On the second stage, it shows us loan payments and how they correspond with the results from operating activity. The last line of the cash flow statement, which is cash balance at the end of the period, shows us on the first stage how our project consumes equity and loan. On the second stage, it shows us how much cash will be generated by our business idea by this or that moment in the future.
Then we need to specify discount rate for our project. It lives here. Next table is very important. It shows financials for the current scenario, simple and discounted payback periods, profitability index, net income, net present value, equity, loan, and total financing needed. And finally, internal rate of return.
Then we have 6 blocks of inputs for the loans that we may get. Amount of loan, when we get this loan, year and month, term of loan in months, interest rate, and grace periods for principal and interest payments in months.
Next output. Here we placed a very simple table showing us total revenues, total costs, and profit done monthly, plus loan coverage ratio. Here we have tab with charts, starting with monthly charts, simple and discounted payback periods, loan coverage ratio, total revenues and total costs, profit, profitability, cash balance at the end of the period, operating profit, and debt payments.
Then we have the same charts but done yearly. Next step. Here we have cash flow statement and income statement done yearly, plus main project numbers.
Then we have sensitivity analysis block consisting of yellow tabs for different parameters: revenues, payroll, fixed costs, direct costs, investment plan expenses, interest rate, and loan amount.
We are adding this parameter to the revenues in this particular case and see financial efficiency if the value of this parameter will increase or decrease with this increment. We can press Sense button and see how financial model reacts if revenues or other costs will increase or decrease on this or that percentage value.
The link to download this model will be placed in the description of this video. We can also automate your reporting environment using Excel or Power BI tools. You can also check out other financial models and Power BI tutorials for a business owner. All the links you will be able to find in the description of this video. If you find this content valuable, please hit the subscribe button and give us a like. Share this video with your friends who have their own businesses.
Stay tuned. See you in next videos.